Hi, good day. This is Ruchit Mehta from SBI Mutual Fund. I'm here to talk to you about our new product launch, SBI Multicap Fund. The NFO opens on 14th of February 2022 and closes on 28th of February 2022. Through this presentation, I'm going to walk you through some of the basics of SBI Multicap Fund. Let us start by understanding about market capitalization. First, what is a multi-cap fund? A multi-cap fund invests a minimum of 25% across large cap stocks. These are mature businesses with a potential lower downside risk. A multi-cap fund invests a minimum of 25% in mid-cap stocks. These are businesses which have higher growth potential and could be available at attractive valuations. A multi-cap fund invests a minimum of 25% in small cap stocks. These can be niche businesses or from new sunrise industries and have the ability to generate higher alpha. A multi-cap fund also has the flexibility to invest a further 25% across either of these three market cap buckets, depending on market opportunity. Where is SBI Multi-Cap Fund positioned in our suite of products? In our diversified funds category, we have funds which are either large cap, mid cap, or small cap, and could have a combination of either of the two or three. The multi-cap fund will have investments in large cap, mid cap, and small cap stocks, as well as have the flexibility to invest across either of the three, depending on market opportunities. Let us understand a little bit about how market capitalization is calculated and stocks are classified. The illustration in front of you explains as to how the market cap of a company is derived. Simply put, it is the price multiplied by the total outstanding shares of a company. Stocks are then ranked on the basis of their market cap. Stocks which are ranked from 1 to 100 are classified as large cap. Stocks which are ranked from 101 to 250 are classified as mid cap, and stocks which are ranked 251 and beyond are classified as small cap. What does this actually mean? Large cap stocks are typically mature businesses. They could be dominant players in their industry. They typically exhibit a very strong business track record, and the stock could be a liquid one with relatively high trading volumes. A mid-cap stock has the potential to be a large-cap stock as it has higher growth prospects and typically can be an emerging business as well. A small-cap stock has the potential to be a multi-bagger, but could also be illiquid and volatile. Here are some of the characteristics of the large cap, mid cap, and small cap buckets. For example, the average free float capitalization of large cap stocks is at 83,700 crores, whereas for small cap stocks, it is just at about 3,300 crores. Why invest in multi-cap funds? When we look at the past data, in the last 10 years, large cap stocks market cap has grown 4.7 times. For mid cap stocks, the market capitalization has also grown 4.7 times. And for small cap stocks, it has grown much faster at about 7.5 times. This slide illustrates the need for having a right balance. This is the performance of the Nifty 100, which is the large cap index, the Nifty mid cap index, and the Nifty small cap index during various phases of the market. On the left-hand side, you will see the subprime crisis period, which is April of 2008 to March of 2009, which was a bear market. And on the opposite side, you see the post-pandemic recovery phase, which is March of 2020 to December of 2020, which was a bull market. This chart illustrates, in bear market conditions, large cap stocks tend to perform better, and in bull market conditions, small cap stocks tend to perform better. The chart here illustrates the performance of the Nifty 500 Multicap Index compared to the Nifty 100 Index using 5-year average rolling returns. As you can see, in most instances, the multi-cap strategy delivers a better 5-year rolling return than the Nifty 100 index. It is also important to diversify your investment so that you can limit your downside as well. As shown here, the investment into the Nifty 500 multi-cap index tends to do better than the Nifty small cap and at times the Nifty mid cap as well. Presenting SBI Multicap Fund. SBI Multicap Fund combines the flexibility of a multi-cap strategy and the internal analyst high conviction portfolio. The multi-cap strategy allows for a diversified allocation across market capitalization. It provides for portfolio flexibility to invest on a market cap agnostic basis within the 25% limits. It allows for having a sector agnostic approach. The high conviction analyst portfolio combines the strength of the highest conviction stock ideas of our 15 sector analysts. It allows for the fund to be style agnostic, and it allows for us to invest in the best ideas across sectors. So how does the analyst high conviction idea work? In the listed universe, there are approximately 2,000 stocks which have a market cap above 100 crores. Filtering for liquidity and quality, about 1,200 stocks are investable, of which approximately 350 stocks are actively covered by a 15-member analyst team. The analyst team conducts fundamental research on these companies, has a detailed research report, and has done financial analysis and sets a target price or a fair valuation for each company. Finally, the analyst rates a company into either it being a sector underperformer, where the company is expected to deliver returns which are lower than the sector average, or a sector outperformer, where the company is expected to deliver returns better than the sector average, or these are buy ideas, which are the best ideas expected to deliver strong absolute returns. Out of the sector outperformer and the buy ideas, the analyst curates them to a high conviction idea list. These high conviction ideas are then ranked by each sector analyst in terms of priority, and then each one is given a confidence score. After this process, the portfolio manager will construct the multi-cap portfolio, applying additional filters for factors such as liquidity, existing ownership, and risk management. A multi-cap fund allows for the fund to be sector agnostic. This is important because sometimes stocks are owned simply because they are part of a sector and which may not necessarily be the best approach or may not be necessarily be the best business to own. The SBI Multicap Fund approach is to identify opportunities through a bottom-up stock picking process, to have an unconstrained sector agnostic approach, and focus more on absolute return by focusing on the quality of the business and the business economics. It is also important to look at stock selection. This is something that the team focuses on. This slide here illustrates the divergence of stock returns compared to how the index has performed. For example, when we look at the large cap index, the index return in the last 3 years has been about 18%, with the maximum return by a stock at about 260% and the minimum return at a minus 22%. When we look at the small cap index, the index return is a solid 23%, but within that, the minimum return of a stock was a minus 33%, whereas the best return by a stock was close to 300%. This just illustrates the importance of focusing on stock picking. Another example here, if you would have invested 1 lakh rupees in the Nifty 500 Multicap Index on January 1st of 2013, the index return was a 16% CAGR over that time period, whereas instead of doing that, you would have invested 50,000 in SBI Blue Chip Fund, 25,000 in SBI Magnum Mid Cap Fund, and 25,000 in our small cap fund, you would have got a return of 20.5%, a substantially better return, highlighting the team's stock picking abilities. What is the investment opportunity here and what is the investment process? Our investment thesis is highlighted here in this graphic. We have a macro and asset allocation framework. We focus upon bottom-up research. We have a solid effort on lateral research, which includes ESG and forensic analysis, as well as a host of quantitative tools, and we run our own multi-factor models as well. We have a 7-layer robust investment process. It starts with idea generation, where the team carries out multiple screeners, does in-house research, does channel checks, and utilizes the sell side. It moves on to our scuttlebutt phase, where we focus on more on-the-ground research, meeting competition, customers, suppliers, and then management across the pyramid of a company. In our analysis stage, we focus on the earnings model of a company, the financial performance over a 10 or 15-year cycle. We focus on estimating the value of a business. We try and understand the moat of a business, the strength of the moat. Then it moves to our investment thesis phase, where we write down our rationale behind recommending to invest or not to invest in a business, the target price or fair valuation that the analyst has derived for that company. Then we focus on portfolio construction. There we have multiple layered approach, including a template which lays down the guardrails of how a portfolio is constructed. We focus a lot on risk management and portfolio sizing and using the inputs of the analyst team using the analyst portfolios. Execution is about the strength of our dealing team in handling market intelligence, price volume trade-offs, and doing technical research. In the monitoring phase, we continually focus upon researching our investee companies on an ongoing basis, updating our valuation models, and testing our investment thesis. SBI Funds Management research has focused a lot about spotting the right opportunity. In recent times, we have seen a high frenzy on the primary market size. This slide illustrates as to how focused we have been on our research efforts and picky about the kind of companies that we have invested into. For example, in the recent times, there have been close to 95 odd IPOs that have come through, where we have participated only in about half of those. In the small cap space, we have been a lot more choosy, investing in only about 30 of the small cap stocks that have come for listing compared to a total of 75 that have come in the market. The investable universe is growing, particularly as more new age businesses are coming through. However, not every business is well placed, whether it be fundamentals or the valuations, and we have to be a lot more focused on which business to invest behind. Why is this product suitable for you? Right? This product is suitable for those who are first-time investors and are looking for long-term wealth creation, which we would typically say to be more than 5 years. This product also allows for you to consolidate your portfolio. At times, investors can have investments across different mutual funds, different categories. This fund allows you to sort of consolidate your investment into a smaller set of funds. This fund is for long-term investors who are looking to focus more on their financial goals. And this is also a potential investment for direct equity investors, as it allows a diversification across various types of market capitalizations. Why should you choose SBI Multicap Fund? One, it will have an unconstrained sector agnostic approach. Second, we will focus on active stock management with a bottom-up strategy. Three, this fund is going to be driven by the high conviction analyst portfolio. Four, it will be style agnostic with a broader opportunity for stock selection. And five, it is a strong pedigree of our investment team, which has delivered returns across market caps and cycles. Just a few facts about the scheme. It will be in the multi-cap scheme segment. The name will be SBI Multicap Fund and be managed by Mr. R. Srinivasan. Before we close, I'd like to talk to you about Mitra SIP. Mitra SIP is a tool which enables you to do an SIP and as well as enroll into an SWP at the same point in time. How does it work? Right? The subsequent slide explains this a little bit better, but in a nutshell, you register for an SIP for a specific time period, which is between 8 to 15 years, and at the same time, you register for an SWP for a specific amount of money. Let's take this illustration. You choose to, let's say, invest rupees 10,000 per month. You choose a tenure, let's say between 8 years to 15 years. And at the same time, you choose your SWP program. Depending upon the tenure you've chosen, you have the ability to choose a multiple of your original investment. So let's say you chose a 10-year tenure, you can withdraw 1.5 times your original monthly SIP, which in this case would be about 15,000 rupees. This illustrates a little more in detail. Let's say you chose to invest for a period of 10 years, a sum of rupees 10,000 per month. This results into an investment amount of rupees 12 lakhs. If that investment grows at a rate of 12% per annum, then the market value of that 12 lakh rupees at the end of the 10th year is approximately rupees 23 lakhs. After the 10th year is complete, your SWP kicks in and you can have a monthly income stream of 15,000 rupees. If you continue to remain invested and your investment grows at a rate of 8%, you can have your SWP for a period of 25 years and it would result into a residual corpus of 26 lakh rupees. So what are the benefits of Mitra SIP? It helps to build long-term wealth for your financial independence. It enables to do both an SIP as well as an SWP at the same point in time. It is a one-stop solution for goal-based investing, and it eliminates the excess unwarranted withdrawal due to a predefined monthly SWP limit as a multiple of the SIP installment. Why SBI mutual fund? We are trusted by more than 1 crore investors. We are amongst the oldest asset managers in the country with a legacy of over 35 years. We are among the first investors in the country to sign the UNPRI as well as the CFA Asset Manager Code of Conduct. We have one of the widest reach across the country, servicing 99% of the PIN codes of this country. We have a 65-member investment team with an average 15 years of experience. And we have an array of digital tools to ease your transactions. Thank you. Have a good day.